The next company on our radar is Epack Durables. The stock has surged actually more than 35% in the current year, 2024 so far. The company reported quite a strong set of numbers for the first quarter as well. The management foresees new business opportunities with diversified new and existing customer base perhaps in focus. To talk about this, we have with us Ajay Singhania, Managing Director and CEO at Epack Durables. Thanks very much, Mr. Singhania, for joining in. So you had a good first quarter, right? We're talking about a sales growth of, I believe, about 77%, margins at about 6.7%. And now we are approaching the festive season with Ganesh Chaturthi kicking off the festivities, right? So just tell us, what is the expectation you're working with? What is the channel inventory like? And like to like, last festive over this festive, what is the growth that you're hoping to achieve?
Yeah, so good morning. So first of all, especially the main product we are into air conditions, we have seen phenomenal growth at 77% in Q1, and the journey still continues. So even Q2 seems to be a very good track, and the channel inventory is at bare minimum. So the momentum continues for AC growth and AC sales, and we foresee that this growth would still continue in Q3 and Q4 onwards. So overall, AC, the market, we expect to grow at almost 30% plus this year, and we will definitely surpass the market growth. So at a company side, we're looking at a growth of almost 50%, 45 to 50% growth we are looking at overall compared to last year. And in terms of festivity, the small appliances, the small domestic appliances we are into, so probably there was some slowdown last year, but this year we are seeing again a phenomenal growth even in the small domestic appliances. So be it mixer, grinders, induction cooktop, every product we see good traction, and the order book is really good.
Mr. Singhania, good morning. So for the full year, what kind of growth are we expecting, sir?
So we are looking at something around 45 to 50% growth.
Overall top line growth?
Yes.
And this, and for smaller, I mean, across the board, there is no discounting as such, right? Or is there a fair bit of discounting which is already which you can see as we get into the festive period?
No, so this is like the current months, August, September, and October, the peak months for the festive sales. So definitely the growth is much more than what we saw last year. So we are again looking at a growth of almost, let's say, 60-70% in this quarter.
Okay. Now I meant discounting, or there isn't that much which is underway.
So especially for us as an OEM, we work on the commodity prices. So the commodity, any decrease in commodity gets passed on. So for us, there is nothing called discounting.
Okay.
All right. Hi, Ajay. Good morning. Good to see you in. What would it mean in terms of margins? 45 to 50% growth on the top line. And what is the margin band we should work with? And also, you're trying to diversify a little bit. I think currently RAC contributes 80% of your total mix, which you're likely to see it come down a little bit. Are you on track by FY26? Does it come down to that 70% odd?
Yeah. So FY26, yeah, we're definitely looking to bring down the dependence on AC as a whole. So probably 26, we should be somewhere between 70 to 75%, and the small appliances components put together contributing almost more than 25%. So that's the ideal picture we are looking at currently, and we are on track. The new appliances we've added, especially washing machine, is now completely ready, and we have started the pilot production in our facility in Sri City South, and we are very hopeful that from October onwards, we'll start rolling out the product to the customers. Okay,
all right. And you were giving us the margin band as well?
Yeah. So on margin side at EBITDA levels, see, last year we achieved almost 8.1% of EBITDA margins. So although we aspire to continue the same momentum, but at the same time, since we're investing a lot into the future products and we are ramping up the teams to get ready for the next leap. So, but anywhere between 7.75 to 8 is ideally the band we are looking at in terms of EBITDA margins.
Okay, all right. And just one more word, since you're entering a new segment, which is washing machine, what kind of capacity do you have? How does it fit into the industry capacity?
This is especially for us, getting into washing machine is a strategic decision, because most of our capacities created for AC, the manufacturing capacities I'm talking about, are largely ideal during the non-AC season. And this is the time when washing machine really picks up. So for us, washing machine is a strategic product in terms of utilizing the overall manufacturing capacity. So, in terms of the capacity what we put up, it's almost currently we are starting with 40 to 50,000 units a month, and we'll gradually ramp it up to almost 150,000 in next 3 to 4 quarters. So this is what we're looking at.
So
fit into
Yeah,
the
yeah,
market.
Mr. Singhania, go on.
So fit into the market. See, AC and washing machine both are underpenetrated currently in India. So AC is anywhere between 7 to 8% is the penetration, whereas washing machine is 10 to 12%. So there's a lot of room to grow, and especially fully automatic is one product which we are entering into with. So there is a lot of conversion which is happening, premiumization. So people are moving from semi-auto to fully auto. So this is where we see a gap in the market.
All right, Mr. Singhania, we'll leave it there. Thank you very much. Appreciate you joining in, and thank you for sharing those details with us.